Equity Management Academy. October 6, 2021. Gold. Prepare for a 20% rally, from the annual lows into Q1, 2022. Summary. This morning, the government announced that unemployment claims finally fell after a month, but 4.2 million Americans are still receiving benefits. The labor market appears to be struggling less than expected. The gold market is showing a lot of buying action. The market is ready to move up again, but it may move down to test $1,765 again. We are probably going to make the annual low over the next few weeks. Fundamentals. This morning, the government announced that unemployment claims finally fell after a month, but 4.2 million Americans are still receiving benefits. The labor market appears to be struggling more than expected. About 326,000 people filed for unemployment benefits this week, down about 38,000 from the previous week. Economists expected about 345,000 claims. About twice as many Americans remain on unemployment benefits compared to before the pandemic. Gold. The CEO of the Equity Management Academy, Patrick MontesDeOca, said this news led to a bit of a sell-off in precious metals. Gold came down to almost the daily buy one level of $1,751, but then it reverted, activating a bullish price momentum. According to the artificial intelligence embodied in the Variable Changing Price Momentum Indicator, VCPMI, the target is $1,771. The market is showing a lot of buying action. The market reversion back up means that, MontesDeOca said, the market basically discounted the fundamental news. He argued that raising interest rates will be bullish for precious metals. Raising rates is bearish for most instruments that are leveraged, but there will be less of that type of buying as rates rise, since there will be less borrowing and less leveraging in various markets. Precious metals have been in an inverted market since last year, he said. Gold hit $2,089, discounting the damage that the pandemic had caused. The market then declined back down to test the levels of support around $1,680. The 61.8% Fibonacci golden ratio retracement. Then it reverted back up again. The market is matching the Fibonacci wave model. We are in the beginning of a third wave. The market is ready to move up again, but it may move down to test $1,765 again. However, the VCPMI predicts that the market is far more likely to go up again. When gold came down to the weekly average of $1,733, it found a lot of buyers. It is also an area of support based on the daily data. For the monthly gold report, with gold closing below $1,785, the trend momentum was bearish. A close above $1,785 will negate this bearish momentum to neutral. The monthly price momentum of $1,772 was also bearish. A close above $1,772 stop will negate this bearishness to neutral. On the downside, the monthly targets are the buy levels of $1,707 and $1,756 for the rest of the month. If we trade through $1,772, we have targets of the sell levels of $1,823 and $1,888. For the weekly gold report, the weekly trend momentum of $1,783 is bearish, while the weekly price momentum of $1,749 is bullish. So we had a bullish price momentum within the larger bearish trend last week. So $1,777 and $1,793 are the weekly targets for this week, which is where you want to lock in your profits. The fact that the market reverted based on the economic news that came out, MontesDeOca said, is just icing on the case on top of the technical indicators. The fundamentals appear to be moving toward aligning with the technicals as we move into the third and fourth quarter of this year. We are probably going to make the annual low over the next few weeks. Any opportunity when the market comes down, add to your positions. We are about to complete a cycle and start a new 360-day cycle with great promise. The VCPMI is looking for a 20% to 25% rally over the next 2 quarters. Bitcoin. Bitcoin is at 55,160. On October 1st, we recommended to go long from the buy one level of 43,325, which is the first level of support using conventional technical analysis. This was an area where the VCPMI says you want to buy and go long. The market then came back up and reached the weekly sell levels, which were the targets of 51,245 and 53,009.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.